Hi there, nice to have you back. Today we're going to look at another example of a decision tree in Excel. This is going to be a larger example with two parts. I made a while back a very quick introductory video on decision trees in general, and I highly recommend you watch that first to get acquainted with how the tree works and what the nodes do and all of that. So I'm going to leave a link to that video in the description of this video, and also I'll add a link to it here at the top of this one for you to click on if you want. This way you familiarize yourself with this particular add-in that I'm using, the tree plan add-in, and then going through this video you can focus on the problem itself and not really get lost with using the add-in. Alright, so let's get to the particular problem here. It's a strategy example. And here's the story. So this firm, Calciatore Ferragamo, they have developed a new line of products, and top management is trying to decide on the appropriate marketing and production strategy. And they're considering three strategies that we're going to call A, B, and C. So A stands for aggressive strategy, basic, and cautious. Now, they're going to classify the market conditions or market reaction to this line of product as either strong or weak. Strong in the positive sense, as in the market reacted well and really liked the product, and weak is the opposite. And they have, estimated two things about the strong and weak market reactions. First, if market turns out to be strong, depending on the strategy we chose, we can make more or less money, right? So for example, if we went aggressive and we were lucky and it turns out the market had a strong reaction to our product, our net profit in millions will be $30 million. If we chose to go with the basic strategy, we make a little less, 20 million, if the market was strong, and conservative or cautious, 5 million. Now, if it turns out the market is weak, which we won't know, right, before we choose the strategy, and that's the whole point. We have to first commit to something and then see what happens. If we went aggressive, but the market really didn't like our product, we will lose 8 million. And basic and conservative, likewise, we have some data here. Also in their market research, management has come up with some best estimates for how likely they think the market is to react one way or another, strong versus weak, and these probabilities are 45% chance of a strong market and 55% chance of a weak market. All right, so this table here is what's known as a payoff table. Given your decision, there is a state of nature that is out of your control, right? And depending on what state of nature materializes after you make your decision, there's going to be a payoff. And what you want to find out is, given these payoffs and the chances of the states of nature, which decision should I pick? And typically what you do is you try to maximize the expected payoff. So pick the decision that maximizes that. We're going to approach this problem. This is simple enough that you could just do a hand calculation, but the idea is let's build a decision tree to approach this problem, and then we're going to add a few more complications, more details to the problem, and expand that tree and make a more complicated decision. Right? So let's begin here. In this Excel file here, I have copied the data, the payoff table, the probabilities of strong and weak market. So let's build a tree to make this decision. Okay, so as I mentioned in the other video, to pull up or activate the tree construction menu, on Windows you press Ctrl-Shift-T as in Tom, and on the Mac, Command Option T. Again, this is a tree plan add-in for Excel. So you pick a cell here that I chose. You see why I have this particular line here for in a minute, but let's build our tree to the beginning on column H. So let me open up that tree menu. And here goes new tree. Right, so how many decisions do we have, available? We have 3, right? And the default here is 2. So let's click on this yellow node, bring up the tree menu again, and add a branch here, right? So I'm gonna name these, the names of the strategy. Did I choose strategy A or B or C? Great, so the yellow box, remember, it's a choice I make. Now, once I commit to a strategy, the uncertainty will reveal itself. That is, the market will tell me, oh man, the reaction was good or bad. So after this happens, my problem, my story doesn't end, so I have to replace this terminal node with a fork on the road that is out of my hands, right? That's an event node. Will the market be strong or weak? So we click on that blue rectangle, you bring up the tree menu again and say change it to event node, right? A fork on the road out of my hands. And it has 2 branches because there are 2 things that could happen to the market, weak or strong. Great. So let me name them appropriately. Strong market reaction and weak market reaction. If you remember, the numbers above the labels are the probabilities of each of those things happening. So let's refer to the probabilities we were given here. I'm going to point to these values. The chance of strong is 45%, and I'm going to anchor that because I'll be copying this tree around and I want these references to remain pointing to the right places. Now, on the weak one, you could either point to this weak in C8 or make it be 1 minus the strong. Either way is fine. Okay, great. Now, below the labels is where we put the payoffs, right, for that particular event. So if I chose aggressive strategy and the market turns out to be strong, what is my payoff? It comes from here, right? So it's this 30. So I could refer to that 30 here, and let me anchor that too. And if I chose aggressive strategy and the market was weak, I can point there to get to indicate that I'm gonna lose 8 million. Great. Now, this is pretty much the end of the story after I choose a strategy so far. Now you notice that if I were to choose B or C, a similar fork on the road would happen. I would have to analyze, was the market strong or weak? So instead of just rebuilding this whole thing here 2 more times, I could just copy it to save myself some time. So if I click on this green circle and bring up the tree menu, there's an option to copy the tree or the subtree. Click OK. And then you click on the blue triangle and you bring up the tree menu again and choose paste the subtree. You paste it here. And notice I'm going to have to paste it 1 more time, right? So I'm going to click on the other blue triangle, bring up the menu, and click paste again. Great. Now, the label strong weak is the same and the probabilities are the same, but I need to update the payoffs, right? So let's do that. So the payoffs under B will be 20, right? Don't forget to anchor that. And 7. So let me change this. And the payoff under C will be 5 and 15. So C is good when market is weak, right? C is the best choice when market is weak. Great. Now let me do one last thing, which is, if you recall from the other video, a decision tree will tell you what to do by giving you values inside the decision nodes that are under your control. These are the yellow boxes. Now this yellow box is not telling me anything. That is actually because this yellow color is actually covering a number that's in there. And that's because the transparency level was basically 0. Let me make it a little more transparent. And now, if you can probably see here, there's the number 2 in there, right? What does that mean? It means it's telling me out of the branches that come out of this yellow node, starting at number 1 from the top, go to the second one. So 1, 2. That is to say, out of these 3 strategies, if you want to maximize the expected payoff, you should choose strategy B, because it has an expected payoff of $12.85 million. Okay, and this covers pretty much what this first part of the problem was talking about. So if you want to maximize the expected payoff, given this payoff table and the market outcome probabilities that we have, the basic strategy is the best. Great. Now, the story continues, and they're thinking, okay, this is all good, but maybe we should do a little more research before we make a decision, right? And let me read to you what they say here. Although the basic strategy B looks appealing, Verragamo's management has the option of asking the marketing group to perform maybe more comprehensive market research study beyond what they have done so far. So within a month, this group can report on whether the study was encouraging or discouraging, as in, we're going to think of encouraging as it is sounding like the market will be strong, right? You have, increased your belief in that. And we're going to interpret this discouraging as it is sounding like the market won't like this product. So discouraging in that sense. In the past, so when you look at similar studies of similar products in similar, let's say, areas of demographics, such studies have tended to be in the right direction. Of course, the study is not going to be perfect. It will make mistakes. But they say the following. When the market ended up being strong, the studies were encouraging 60% of the time. So this is a conditional probability. At this point, let me show you this other tab here in the sheet and bring back the story. What this is saying is, when I look back, like a hindsight information, when I look back at previous studies that this group performed, and the markets had a strong reaction to the product, because I'm just looking at the past, I know what the market did, right? Whenever that happened, whenever the market was strong, how often did these guys predict correctly? As in, how often did they say, I am encouraged, right? And this number is 60%. And they predicted incorrectly, as in, market turned out strong, but they predicted discouraging, 40%, the remaining probability, right? And this is what this number is over here, right? So in the past, given markets were strong, the study was encouraging, as in predicted correctly, 60% of the time. And whenever markets were strong, this is me looking at past data, the study was wrong. It predicted discouraging 60% of the time, which is the remaining chance. And likewise, they look at, what about, past data about weak markets. The study also tended to be correct in the following sense. When markets were weak, the study predicted correctly a discouraging result 70% of the time, and predicted incorrectly an encouraging result 30% of the time. Okay? So this is our conditional probability, as in the value, this value 0.6 here essentially is the probability that I predicted encouraging given, so this vertical bar is the given that the market was strong. Okay? That's what that is representing. Great. So let's go back to that story. So I know now the past performance data of this market study, and they say the following. Performing such a study would cost you $500,000. So should we do this, right? Is it worth spending this money to gather more information before we commit to a strategy? Okay, that's the whole question. So in our previous tree, we were just going with our initial belief. I think there's a 45% chance of strong, a 55% chance of weak. These are the payoffs. What do you do? A, B, or C, and done. Now we want to do the following. Before we commit to ABC, let's consider doing a study. So that's going to be a fork on the road under my control. Do study or not, right? First branch. If I choose for the not, don't do study, I end up with a tree like this, right? Exactly like this one. If I choose for the do the study, at that point there's going to be a branch that says, was the study encouraging or discouraging, right? And after the encouraging or discouraging branch, then I will make my decision, meaning you will see a tree like this. Once I know I was encouraging, should I do A, B, or C? And then the other half is, what about if the study was discouraging? Should I do A, B, or C? Okay, so this is how we're going to expand this tree here. We're going to make it bigger by adding these other branches that I just mentioned. Let's go ahead and do that. Now, in order to save time, notice that I'm going to have to rebuild this tree because it's going to reappear. I'm just going to copy this and begin from there. So I will take this whole tab so that I don't mess this one up. I'm going to take this whole tab and click here to make a copy of it. So create a copy at the end. Okay. And I want to use now the data, right, of the second half of the problem. So I'm going to go in here and delete all of this because this is my copy of the first tree. I'll delete all this. This is the first half of the problem. I'm going to take the data of the second half and paste it there. All right. And then I can begin and do the bigger tree. Copy. So I'm pasting that data here in this. And because, this piece of the data that's common for both parts was exactly in the same position as the initial one was, my tree that was referring to those positions continues to work fine, right? And this, of course, was done on purpose. So this tree now is identical to the first tree we built, but we're going to expand it to include the test possibility. Great. Let's go. So I'm going to expand this tree backward because the test happens before this ABC decision, right? So here we go. We click on this node here, and we bring up that tree menu. Again, it's Control-Shift-T for Windows and Command-Option-T for Mac. And I'm going to insert a node here. But what's going to happen before I choose ABC? Well, I will have run the test. And the test could have been encouraging or discouraging. So before this decision ABC, there's going to be an event. Was the test discouraging or encouraging? So I'm going to insert an event node here. And this expands the tree that way. And this event, as I just mentioned, has two outcomes. So I'm going to have to add a branch so that this green circle has a two ways to go out of it, right? So I'm going to add a branch. And let's say at the top it was encouraging. And at the bottom it was discouraging. Great. And we're going to have to figure out what is the chance of encouraging, what is the chance of discouraging, just like we did chance of strong, weak. But let's first just build all the branches of the tree, then we come back and put in the data. Great. But I also have the option of not doing the test, right? So this, if I just stop here, this is me saying I will do the test. And this is my first decision, encouraging or discouraging. But let me also include the possibility, by the way, no test is also a choice. So I'm going to expand this tree one more time backward. So I click on that green node. And I'm going to insert a decision because now do test or not do test is up to me, which means it's a yellow box, a decision node. And I'm going to have two branches because it's do or don't do. So just like I did with the first green, I'm gonna add a branch to this guy here. And here we go. So now this choice here is test, right? And the choice below is not test. Great. So now let me summarize what this tree is saying. I begin here and I say, maybe I'll test, maybe I won't. If I test, the test could be encouraging or discouraging. And once I know that, I'm going to pick A, B, or C. So this chunk of the tree here, this big subtree, needs to appear one more time, see if you agree, here. Because if the test is discouraging, I'm still going to make the decision A, B, or C. And that subtree also has to appear here, because if I say don't do test, what comes after that? Well, I pick it anyway. I have to pick A, B, C. So I'm going to take this tree here, subtree rooted at this yellow box, and I'm going to copy it to paste it twice in those in place of those two blue triangles. The copy tree, and I'm going to paste it once here. So choose paste tree, and paste it one more time here. Paste tree. Okay. All right. So if I choose not to test, it's basically me going back to the initial situation. And so this tree, as it is right here, it is perfectly correct. There's nothing to do. However, if I choose to test, I'm going to have to update some of the data here. More specifically, these probabilities. Because first of all, I need to know what is the chance of an encouraging test. And right now, the default is just say, is it going to be encouraging 100% of the time? That's not true. And secondly, the probability here, probability of strong, is not really 45% because I have now gathered additional information. I performed a test, which could be, for example, I survey a bunch of folks. And if the test was pointing in the encouraging direction, we know from past history that if I say encouraging, I tend to be correct. So this number here should probably be higher than 45% if I ran a test and it was encouraging me. And this number here should probably be lower than 55. Conversely, if I ran a test and it is discouraging, I am probably going to think weak with a higher probability than 55%. So we need to calculate these chances. And then we plug them into the tree, and then we'll know what's really going on and whether or not the test is worth performing. Okay? Great. So let's do that now. So first of all, I need to know what is the probability of encouraging, the PE, right? Probability of encouraging. I wasn't given that number. What I was given were the following numbers. What is the chance of encouraging given strong, right? This guy here. And what is the chance of encouraging given weak? But there is a formula that you may recall from your probability classes or statistics classes that says, well, the probability of an event without any conditions, right, is if you can split the universe of possibilities into as many conditions as there are. In this case, there are just two, weak and strong. It goes like this. The probability of encouraging is the probability of encouraging under strong markets times the chance of a strong market plus the probability of encouraging under a weak market times the chance of a weak market, because strong and weak are the only two types of market there are. Well, the first two, the PE given S, PE given W, are these numbers here. And the PS and the PW, chance of strong, chance of weak, are these two numbers here. So I only have to do a sum product between these guys. And I'm going to anchor this. And these guys here. Okay. And the reason I anchor that is because the probability of discouraging, PD, is going to be the same, right? PS, PW, but now multiplied by the probability of discouraging given strong, the 0.4 and the 0.7, right? And of course, the second one is 1 minus the first, which you could also have done, right? So I have these chances now, right? The chance of encouraging, I can point here. And the chance of discouraging, I can point to the other one, or do 1 minus either. Great. So we filled in one missing piece of the new tree. And now we have to calculate these chances here that we talked about. In terms of conditional probability, what is this probability here? Well, this is the probability the market will be strong given that I ran the test and the test said encouraging. So this is PS given E. But what I have here is P of E given S, probability of encouraging given strong. So I have the opposite order, right? Now there's something called Bayes' rule that you probably also learned in your stats and probability classes that you use exactly to make this flip, right? If you're given P of B given A, but you want P of A given B, and that's exactly what we have here. We were given P of encouraging given strong, but what we want is P of strong given that I know it's encouraging, right? The encouraging happened first. So I need to flip this guy here. But the flipping is done by this formula. So the probability of strong given encouraging is the probability of encouraging given strong times the probability of strong divided by the probability of encouraging. And this is just me following this formula here. Okay? And the probability of strong given discouraging is the probability of discouraging given strong times the probability of strong divided by the probability of discouraging. Okay? Great. Now notice, if you recall, I mentioned, well, if the test says encouraging, I should believe strong with a higher probability, and that is exactly what happened, right? I went from a 45% to a 62.1%. Of course, the test is not perfect. It does make mistakes, and this calculation has taken that into account. That's why I did not raise my probability to 100%, even though it says encouraging. So given the test is encouraging, the chance of strong is going to be this number, right? And because we had down here 1 minus, this guy is already updated. And all of these are going to be the same, right? What is the chance of strong given the test was encouraging? It's this B12 guy. Because my choice of strategy is not going to affect the market. Great, so I have updated that. And if the test is discouraging, right, I just have to change what is the chance of strong given discouraging is in B13, right? So I'm going to go in there and replace these values by B13. So chance of strong given a discouraging test, B13. Here, B13. And here, B13. Excellent. Now we have these conditional probabilities properly in the tree. And there's one last thing we need to include to figure out, was this test worth performing? And it's the fact that the test isn't free. Remember, they said it costs $500,000. Where do I place that? Well, if you recall from the previous video, whenever a event, right, or decision have a payoff, and for now our tree is using positive numbers as income, so it's going to represent expenses as negative numbers. Whenever there's a payoff for a decision or an event, you place it below the label. So if doing the test costs money, down here is where I would say, oh, the payoff is a negative because it's an expense. Negative, where is the value? Negative here, B15. Great, and now it has incorporated that expense into the calculation, and let's see what the tree says. At the very front node, my decision says do 1. Well, 1 is the top branch. It is telling me to do the test. So this test pays off. Why? Well, let's see. Not doing the test, if we recall from the previous tab, right, the earlier one here, our expected payoff was 12.85 million, which is of course the same thing down here. But doing the test, the expected payoff is a little higher, it's 12.955 million, and that already includes the expense of $500,000. Okay, so the free test, right, had the test cost nothing, our expected payoff would have been 13.455 million, but if we include the cost of the test, it goes down by $500,000, and you get to, so it is still better than the 1285. Now, what else is the tree telling me? Well, it first says do the test, so go to branch 1. At this point, there's something out of my hands. If the test is encouraging, what should I do? Well, let me just change the transparency of this node again, because I want to know if the test turns out to be encouraging, what am I supposed to do, right? It says do 1, meaning go aggressive, right? And if the test turns out to be discouraging, it says do 3, it means go conservative. And if you follow this course of action that the tree is prescribing to you, your expected payoff will be better. Even considering the test costs $500,000, you will increase your expected payoff. And that's why it's recommending you go that route. All right? Great. So this is essentially the gist of this problem that I wanted to go over with you. The idea of performing an extra study to improve your understanding, right? To get more accurate probabilities, and then make a decision based on that. I also wanted to go over the idea of these conditional probabilities and how they change when you do the tests. And if you need to flip your conditionals using Bayes' rule, that's how you do it, and so on. So now we know what the course of action is. There are a few more things that we can do with this example. I'm going to make separate videos for them so that this one doesn't get too long. But just to mention to you what they are is we're going to go over the idea of the value of information. We're going to go over the idea of doing sensitivity analysis with these trees by using the Excel data table function. And finally, we're going to go over the idea of risk profiles. And I'm going to make 3 videos, one on each of those topics. Again, using this same example. So it's good that you went over this, and then you can just, we're going to begin from these finalized trees and do these extra steps. So hope to see you guys here again for the next videos. Thank you for watching. Bye-bye.